All right. It is a wonderful day at Generis and Associates, and we are delighted for all of you. Let me go ahead and welcome you to today's update webinar on the Paycheck Protection Program Loan Forgiveness. Before I do share screen, you'll see that on the screen today with me is Pat Generis, our managing principal. He'll be walking through an example on FTE, full-time equivalent calculations. Kellen Leone has also been studying the law and helped build the worksheets that Pat will be giving those examples with. And then Austin Scherer, our manager of digital marketing, will help field the Q&A and facilitate that. So with that, let me go ahead and share screen. As we stated, this is a update on the Paycheck Protection Program, but there are a couple of correlates to that that have come up that have crossed your lap. So let's answer a couple of those things first. First, you may have gotten communication from your lender about the good faith need that you certified when you applied for the Paycheck Protection Program. So you may have gotten an email from your lender that said, hey, when you applied, certified that economic uncertainty made this necessary, and if you want, you could withdraw your application and return these funds. A lot of people felt threatened by that. Many of you shared those letters with us. We calmed your fears, at least we attempted to. And finally, on the 13th of May, the Small Business Administration did indeed clarify that PPP loans less than $2 million were basically made in good faith. Those threats that they were making were for the bigger companies that had access to more resources or might have been publicly funded. And so none of our clients were in that group. And so you guys are in good shape. So you shouldn't need to worry too much about audit scrutiny. That said, you'll see later today that you do need to keep all the documentation related to your PPP loan should the SBA ever want to review that, both the good faith and how the money was spent and so forth. So that will happen at the end. Okay, that's point one. Point two is regarding the economic injury disaster loan. A number of you may have gotten those grant advances, which were to the tune of $1,000 per employee. Nationwide, there have been more than 3 million of those worth about $10 billion. Probably many of you have gotten emails from the Small Business Administration about creating a portal. Looks like what you're seeing here in the middle of the screen here. What we would say is, unless you want to borrow additional money directly from the SBA at 3.75% for 30 years, don't take additional action. You don't need to create that account or that portal. You had money deposited into your account that you used when you applied for that economic injury disaster loan. And those grant advances either got rolled into your PPP loan if you received the EIDL and disclosed it to your PPP lender prior to that approval or funding, or on the grant portion of the EIDL will be deducted from the forgivable PPP, as you'll see in the loan forgiveness application. Okay, as it relates to the loan forgiveness application, the SBA released that on 5/15 of 20, and before we get into some of the details on that, we do want to just share a few high-level thoughts for you, which is if you are a client of Generis and Associates, your account manager is going to help you complete the application. There's a lot of moving parts in there. There are things to figure out. There are calculations, there's data, and we're going to help you. So today, we're going to walk you through to know what some things are to expect, but that doesn't mean you're flying out of the nest solo. We're totally holding your hand through this. So what you should plan to do is connect with them after the webinar today to discuss your strategy on your PPP in the event that today's information would require a change in strategy to optimize loan forgiveness possibilities. Okay. That said, we have guided you all the way through on the best available information at the time, and we do update you as things change. And so all of our recommendations and guidance has been on the best available information. And as that last point on this slide says, kind of the government is building this plane as they're flying it because of all the questions that lenders and small businesses have. So as new information comes in, we may need to adapt strategy, which is exactly why we're bringing you this information in a timely way so that you can get with the people who take care of you on our end to go ahead and update that strategy. All right. Lenders are advising small businesses not to yet complete or submit the application for loan forgiveness until the actual 8-week covered period comes to an end. And that is in the event that the application itself changes from the SBA or additional guidance emerges. And for sure, lenders will inform you of their process and timelines. They may use the SBA loan itself. They may adapt it for their own purposes and create some portal that basically contains all that information. So don't jump the gun is the point here. There are still questions to be answered, and we are still expecting additional guidance and clarifications. But do take a look at the application, which we have linked on our webpage on the coronavirus updates page, and begin to get your brain wrapped around it, which is part of what we're here for. Okay. One big piece that came out of that application loud and clear is this first point that business owners cannot pay themselves more than they paid themselves in 2019. In fact, you have to certify that the dollar amount for which forgiveness is being requested does not exceed 8 weeks worth of 2019 compensation for any owner employee. So if there was a strategy by anyone to go ahead and bump owner pay to optimize forgiveness, we're going to need to reevaluate that strategy. Of course, it's still true that wages are capped at $15,385 per individual, but it's wages that are capped. That cap of $100,000 per employee does not include benefits. So in addition to the actual wages paid, it is still true that it's a forgivable deduction and expense around health insurance contributions made by the employer, but excluding contributions by employees. So if you pay for health insurance and you have employees pay for 50% or 70% or whatever, you've got to deduct the employee contribution portion from the employer contribution, right? What employees have given towards that. Same thing with retirement contributions. Those are still eligible, excluding what is contributed by employees, and then likewise state unemployment taxes. So this was a big kind of learning point for us about business owners not being able to pay themselves more than they did in 2019, but it's not unreasonable and completely foreseeable. Okay, covered period, just to remind you all, is the 8-week period, 56 days, that begins on loan disbursement date, the day that those funds were made available to you. That covered period, or CP, as I will acronym moving forward to save time, that always applies to the rent, mortgage interest, remember not mortgage principal, and to utilities, which is electricity, gas, water, transportation, telephone, or internet expenses that were paid and incurred during this covered period. These expenses must have been in place before 2/15 of 2020. You can't sign on for some new service after 2/15 and expect that to be forgiven, and prepayments are not allowed. They did in this application mention the alternative payroll covered period, which they say is the 8 weeks or 56-day period related to payroll expenses that begin on the first day of the pay period after receiving the PPP loan. This is allowed if you are doing weekly or biweekly payroll, and the purpose of that is to allow for 8 payrolls if it's 8 weekly, or 4 payrolls if it's biweekly, so that they're giving an alternative payroll covered period. If you elect to use that period, then anytime throughout the application where that is an option, you have to elect it in all cases. In other words, for payroll, you can't bounce between covered periods sometimes and then alternative payroll covered period in other times, all right? What are eligible payroll costs? This is really a reminder. Costs paid and incurred during the 8-week period. Paid is the day paychecks are distributed, or that you, the small business, originates an ACH credit transaction to pay your employees. Incurred is the day that the employee's pay is earned. The application says that payroll costs incurred but not paid during the borrower's last pay period of the covered period, or alternative payroll covered period, are eligible for forgiveness if paid on or before the next regular payroll date. The point is, they're trying to allow you to get what really legitimately covers 8 weeks of payroll. And of course, a reminder that individual employee compensation cannot exceed $100,000. They do specify count payroll costs that were both paid and incurred only once. I think what they're saying there is you can't say, well, I incurred it here and then I paid it here, so does that count twice? No, of course not. I mean, so there you have that. All right. And what are payroll costs? It is the sum of gross salary, gross wages, gross tips, gross commissions, paid leave. So if people had paid vacation, family, or medical sick leave, not including leave that was covered by the Family's First Coronavirus Response Act. So there's some other legislation that provides credits for employees who had been impacted by coronavirus, and you can't double dip that way. If you paid someone upon separation, kind of a severance package, that is allowed. And of course, paid or incurred during the covered period. Again, can't exceed the $15,385 for the 8-week period. Calculating FTE, or full-time equivalent. So this is during the covered period or alternative payroll covered period. There's two ways to do it. And for each employee, one way is to enter the average number of hours that they were paid per week, divide that by 40, and then round that total to the nearest tenth, where the maximum is 1. Or a simplified method is assign a 1 for any employees who work 40 hours or more, and then a 0.5 FTE for employees who work fewer hours. And the borrower gets to choose. Now, again, if you're a client of Generis and Associates, we're going to help you make the choice. What Pat is going to demonstrate shortly shows you both calculations based on hours worked and what is going to be more favorable for you in consideration, okay? One thing that is very true here is employees do not include independent contractors, people that you W-9, 1099, owner employees. So you as the owner of a business are not included as an employee in the FTE count, and then neither are self-employed individuals or partners. All right. The loan forgiveness application says, hey, you know, the whole point of this was to maintain employees on the payroll. So you need to maintain your FTE headcount as compared to the prior reference period to avoid a reduction in forgiveness. So you want to get as much forgiven as you can. Of course, 75% needed to be payroll costs. They do give some reduction exceptions. So if some people left your workforce and then you gave them a written offer to rehire them, you laid them off and you said, hey, we want you to come back, but they declined that. Or if you fired people for cause, or they voluntarily resigned, or they voluntarily requested and received a reduction in those hours, then those are not going to count against you in this FTE forgiveness calculation. This is all provided that the position wasn't filled by a new employee, which kind of makes the point moot. If someone left and you rehired someone else, you still have a headcount FTE. But if you didn't hire somebody else, and these cases are true, you're not going to be penalized on it, but you do need to have documentation on it. There is a safe harbor for FTE reduction, which basically means you're not going to be penalized if this is true. Both of these things. One, you reduced your FTE employee levels beginning in the February 15th period and ending in April 26th period. So your headcount dipped during this time frame. And then you restored your FTE employee levels by not later than June 30th to the FTE employee levels in the pay period that included February 15th. So February 15 was still theoretically business as usual for the most part. The whole coronavirus thing really took hold, you know, late March. So this is when it was normal. And if you did have a dip in employee headcount during this period, but you restore it, then that is called a safe harbor, and you're also not going to be penalized. That's going to be demonstrated in one of the examples that Pat shows as well. Regarding salary and hours, again, they reduce forgiveness if the salaries or the hourly wages of individual employees were reduced by more than 25% during the covered period as compared to the first quarter of the year. So this isn't a total salary outlay and total wage outlay discussion. This is a per employee situation. An employee's rate of pay must have been reduced by more than 25%. So if they went from 20 bucks an hour to 10 bucks an hour, well, they're in that situation. But if their rate of pay didn't change, which is probably true for most of your people, you kept their rate of pay the same, then we're not really having this situation to deal with. Nonetheless, there is a safe harbor on salary and wages as well, which is if their wages as of 6/30 was equal to or greater than their wages as of 2/15, you're going to be okay. So if there was a dip in wages, you can still restore it, and there is a safe harbor there. Okay. Regarding documents that you are going to need, and again, as a client of Generis, we're going to help you with this, but for payroll, what you've paid out to people, bank statements, payroll reports, payroll tax filing form, the 941, state quarterly wage reports, unemployment insurance, and then payment receipts, canceled checks, or account statements documenting the amount of employer contributions to health and retirement plans. For FTE, it'll be payroll reports showing the average number of FTE employees on the payroll per month. Again, you're going to have this comparative period looking back in 2019 or at the very beginning of 2020, or if you're a seasonal employer, you could pick any 12-week period here. Non-payroll evidence that you're going to need, basically documentation verifying that these obligations existed prior to 2/15 of 20, and then what would cover business mortgage interest statements, the amortization schedule, canceled checks of payments, and then lender account statements that show from February 20 through the covered period through 1 month after. Basically, here's what was the interest portion that was paid. Likewise, business rent or lease, copy of that lease agreement, receipts or canceled checks verifying payments, or lesser account statements from February 2020 through the covered period to 1 month after verifying payments. And then finally, business utilities, copies of invoices from February 2020 and those paid during the covered period, and receipts, canceled checks, or account statements verifying those. All in all of the documentation, as I told you when I started this thing, you will need to retain for 6 years after the date of forgiveness or repayment. So if all of your loan isn't forgiven, remember this is a 1% loan at 2-year maturity. So it'll be due 2 years from the date that you received it. And the first 6 months, you don't have to make a payment. And so from the date that it is forgiven or repaid, you just want to keep all of this documentation handy in the event that the Small Business Administration or your lender ever needs to go through it. With that, that is my high-level overview of what is this recently released application from the SBA, and also the updated guidance that they put, again, both of which are linked on our coronavirus updates FAQ page. There are still questions to be answered. The definition of business owner and whether spouses or children count, from what we can tell right now, it just says owner, but there is one gray area, which is community property states, which include these states that you see here. So we know that we have some clients in California and Texas and Arizona and some of these other places. So we'll want to do some deep scrutiny on making sure regarding the treatment of spouses or kids who may be employed in the business. And then the other thing is the tax treatment of expense deductions that were part of the forgivable loan. The IRS released this notice, which was very much not in line with the intent of the law. And so there has been some angst and discussion and pushback from Congress about that says, hey, if it was a reasonable expense, it should be deductible just like usual. We weren't supposed to punish people for accessing this paycheck protection program to keep people employed. So there's still some questions out there and more guidance is still needed. Just know that. That goes back to the flying the plane and building it at the same time kind of discussion piece. With that, I want to go ahead and get off screen, let Pat get on screen, and he will share a FTE calculation example.
Thanks, Dave. Yeah, for sure, we're going to need more guidance. But like we've been saying all along, if you wait until they have everything sorted out, it'll be too late. So you have to make reasonable adjustments and make your decisions based on what we know. And I think Dave gave a pretty good summary of what we know right now. I'm going to be pretty brief with the examples today. This is something that we've actually been struggling with, how to calculate these FTEs. I think as of about 5 minutes before this presentation, we finally got a pretty good calculator for this. And account managers, you'll be relieved to know that we're going to get that up in the template gallery sometime today. So I'm just going to go through 2 quick examples. 5-employee company. There's the 2 reference periods. So we start with reference period. Dave talked about this briefly. From February 15th, 19 to June 30th, 2019. These 5 employees had these hours. So account managers, you'll fill in the hours. Simple enough for that entire period. It'll calculate the FTE for you using both methods, rounding to the 10th and rounding to a half, 0.5. And as you can see, there's a little bit of difference, but you have to use that consistently throughout. So you are going to have to pick a method and use that consistently throughout. Of course, we'll calculate it both ways and see if one way is better than the other. Second reference period, Same employees. They didn't add any employees, fire any employees in this example. It's for January 1st, 2020 through February 29th, 2020. And these are the hours they worked and the FTEs that they translate to 3.6 and 3.5. So that's the first step. Figure out your reference periods. And as you can see, I've done that for this employer right here. Then you go to the covered period, and we've actually spread that out by the week. So in this case, they got their PPP loan on 4/16, and we're just tracking the hours per week for their 5 employees. You see there's a little bit of variation here. This guy was laid off for a little while, then we bumped up the hours. Still, and so as we're filling these out for you guys, we will project out what we expect those weeks to have in terms of hours, and that'll help you kind of plan and make sure if it's relevant that you're going to nail your FTEs required. So here you go, week by week, and here we are with FTEs using both methods. Then this final tab is going to summarize it after we fill it all out and let us know if we're okay. And in this case, we are okay. You can see in reference period 1, using method 2, we're at 3.5. Reference period 2, we were also at 3.5. And for the 8 weeks of the covered period, we were at 3.5. So this one worked out perfectly fine. We'll figure that out for you and do some projecting and see if it looks like you're going to be okay on FTEs. Now I'm going to go to another one that does not work out and show you an interesting thing. So here we've got another 5 employee employer. Everybody's full-time. So during reference period 1, everybody worked full-time. Everybody was a 1. Using either method, they were a 1. Same thing for reference period 2 through February 29th. Everybody was a 1. Now we go to our covered period after COVID happened. We laid some people off. And so you can see we've got one guy that's kept working full time. Somebody's got to show up and run the ship. We laid off everybody else for, it looks like 5 weeks. And then we brought some people back full time, but then we had some other people that only worked part-time during that time. And I think that this is a pretty common example. So now if we go to our summary, it doesn't look good, right? So we were at a 5 in either of the reference periods. And in this case, if we are going this way, we would elect to take the 3. Now we're at 60%, and we're going to lose 40% of our forgiveness. But then they give this safe harbor. And the way that we're presently reading the safe harbor, and I hope they give more guidance, is that it's based on 2 dates. And so the payroll that included February 15th, 2020, we know that we were at a 1. We had 5 full-time employees. So a 5 FTE. And then if we look at June 30th, the period June 30th, they're saying that if you get back up to full employment by that week, and so our understanding is it's the payroll that includes June 30th. If we're back up to full time, we've safe harbored. Now, that's our interpretation right now. Frankly, it seems a little ridiculous, but that seems to be the way that the law is written. So there is that safe harbor, and so there is that opportunity. So again, as we've mentioned in the other meetings that we've had, even if you safe harbor and you don't have an FTE problem, you still have to spend the money on payroll. 75% of the forgiveness has to be based on payroll. So even if we could use this safe harbor calculation to stay out of trouble on our FTEs, we still have to have spent the money on payroll. And so that's a separate issue. And I did pull up a sheet just in case I have a question where I have to do some math. Again, account managers will get this out to you later today. And with that, I'm going to give it back to Dave, or probably just open it up. Dave and Kellen, if you'll join me, we could start doing the questions.
You guys ready for questions?
Think so.
All right. Remember, we're still going to be taking questions. So if any other questions that you have come up during this time, remember to get them in the bottom right Q&A section. Our first question comes from Howard Rockman, who asks, are LLC members employees?
Well, LLC members, I assume you mean a partnership, and what they get is forgiveness based on 2019 income. So if you had guaranteed payments or self-employment income on your K-1, you'll see at the bottom of it, it tells you self-employment income that you had as a K-1 member. That was your pay. And you are limited in forgiveness to that number. So if you made over $100,000, you're going to get $15,385 in forgiveness for you as an owner. You're not an employee, you're an owner. You do get forgiveness based on 2019 self-employment income.
That's right.
Excellent. Our next question is more so, I guess, a rumor, but have we heard anything about PPP rumblings about extending the 8-week eligibility period? This comes from Brad Murphy.
Yes, we have heard rumors, and so we do expect further guidance. I know that, the lawmakers aren't real happy with some of the interpretations that, the SBA and the IRS has come out with, and that they are trying to redefine some things for people that, they kind of got the short end of the stick. I think restaurants and salons, it was hard for them to spend the money. Even if you got the PPP, it's hard to spend it when you can't be open, right? And I think that's one of the things that they're working on. But of course, there's no guidance on that yet, but I know that they are discussing it.
Excellent. This next question comes from one of our staff members, Dina Robinson, who asks, any info on semi-monthly payrolls? How will they calculate the 8 weeks?
It'll be 8 weeks. I mean, so you'll have to look at the hours for 8 weeks. And so you're not going to get more than a 1. You look at it that way. And I think we've built the calculator where that's going to work. So if you had, it's 8 weeks. So nobody could have more than 320 hours. So if somebody worked, if they got paid for 340 hours, they're going to be 1. That's how it's going to work. They're going to be a 1. They're going to be a full-time equivalent. That's how it's going to work.
And I would add, it could be a case where, if it's a semi-monthly payroll and what you're trying to do is make sure that at least 4 payrolls are covered during that 8-week period, that you may want to look at the 8-week period that is the true covered period when the loan was dispersed, or the first of the next pay period that followed the loan disbursement using that alternative covered payroll period to see which one is going to provide the optimal outcome on the semi-monthly.
Yeah, nobody's going to get screwed, and there's really no way to game it. It's going to be, you're going to get 8 weeks. You're going to get 8 weeks as long as you pay 8 weeks within, a normal period of time.
Excellent. Our next question comes from Carrie Spiteri, who I will bring in to talk. Carrie, you'll have to unmute your microphone whenever you're ready, and then you can ask away.
Hi, can you guys hear me?
Hi. Yes.
Okay. So is the time period based on the K-1 or our W-2s for basically the business owners cannot pay themselves more than they did in 2018? Is that K-1 or W-2?
That's going to be W-2 wages if you're a corporation, and it's going to be a K-1 if you're a partnership. And I believe you're a corporation, Carrie. So we are. It's going to be the W-2. You're going to be limited to the W-2. Yep.
I guess my follow-up would be, because I'm back and forth from California to here, or to Chicago. So my 8 weeks during that time period could basically be nothing.
Okay. So for owners, I think what they're going to do is they're going to look at 2019 compensation in total, divide it by 52 and multiply it times 8. So if you had a W-2 in 2019 that was, say, $50,000, and I don't want to, I pulled that out of the air. I don't want real numbers. That $50,000 would equate to, would have been easier if I said 52,000, but I didn't. 52 times 8, you would have $7,692 in forgiveness related to your wages. 7,692 would be your cap, and that's what you would get. There's a separate line for owners, and you just fill in compensation based on 2019.
Okay, thank you.
Yep.
Thank you for your question, Carrie. Let me move you out. And our next question comes from Mike Hyman, who says, what if I've added a couple part-time employees that were not a part of the comparison period?
Yeah, you're going to pull up your FTEs, and
Great.
it's really stunning to me the way that they're calculating it. And I thought that, and I didn't want to go through a million examples because I wanted to get to questions. But with anybody working, option 2 for calculating FTEs is they count for a half, 0.5. So literally, if you hired somebody that worked 10 hours a week, they would count as 0.5 in option 2. That those added staff members. So yeah, it would help a lot.
So it's good.
So that's where the account managers can work with people. You don't have to add a ton of people to get your FTEs brought up. And I've always been a little bit less concerned about FTEs because, as long as you're spending the money, you're probably going to be able to get there on FTEs, especially with the safe harbor. But yes, it will help your FTE computation. But I don't think you had a problem anyway, Mike. I know your situation.
Thanks for your question, Mike. Our next question comes from Luke Pascal, who is asking about 1099s. Has there been any guidance about 1099 so far?
The guidance is that they do not count. That was the unfortunate thing that came out in the last webinar, really. Yeah. They don't count. That was one of those things that just contradicted the bill. In the bill, it looked like, the people that you paid via 1099 were going to count. And then they reversed course on that. The SBA said, no, those people get to file on their own. And so you don't get to include it as a payment.
Our next question comes from Lori Badman, who I will bring in to talk. Lori, it's great to see you again. All you have to do is unmute your microphone and you'll be able to ask your question.
Hey, Lori.
Hi, everybody.
Hey, Lori.
I just had a question on the EIDL advance. So which I understand is a grant. I did receive the grant. I never got the rest of the EIDL. Maybe I don't know if the PPP was somehow linked to that and they knew I was getting the PPP. I did get the PPP. I plan on spending 100% of the PPP on payroll. Does the advance have to be paid back?
It does not have to be paid back. The advance doesn't really technically need to be paid back, but it does reduce your forgiveness on your PPP loan.
It does.
So
Okay.
like one or the other was the way that they set this thing up.
All
and
right.
That's, yeah.
All right. I get that. That was, yeah. Okay. Thank you.
Yep. No problem.
Question, Lori. Our next question comes from Linda Recupito, who I will pull in right now. Linda, you just have to unmute your mic. This is a follow-up about LLCs and forgivable wages.
Great. Hey, Linda, can you unmute it for her, Austin?
I can't.
Oh, you don't have a mic. Okay. Well, then go ahead and put in the question and we'll handle it for you.
Yeah. She asks, we mentioned LLCs, but what about corporations that owners are employees? Are those wages forgivable?
Yes, but only 8 weeks, and it's 8 weeks of 2019. So again, you are getting forgiveness for your wages, but you cannot raise your wages. So if you paid yourself $100,000 in 2019, great. You're going to get $15,385 in forgiveness. If you paid yourself $50,000, you're going to get half of that. It's going to be based on 2000. There's no increasing your pay, which in the original, of course, there was no guidance on that. So I know, if there was no other way to get wages up, people have raised their pay. They're going to base it on last year. So if you paid yourself $50,000 last year and you raised yourself to what is annualized 100,000, you're going to get the forgiveness based on 50,000 in wages. And we sort of thought that they might do something like that. And sure enough, they did.
And from a technical standpoint, again, we'll help with filling out the application. They're just not letting owner employees be counted in the employee FTE count. You have your own line where your wages are forgivable and reducible up to that $15,385 amount, again, but based on 8 weeks of 2019 comp. So it's just they're not letting owners be called employees from an FTE headcount standpoint.
Mhm.
So thank you for your question, Linda. It looks like we answered it for you. Our next question comes from Community Services,
Mhm.
who I will bring in now.
Hi,
Hi.
Hello.
Hey, how are you?
it's Angel.
Hi, Angel.
No, I came up that way. I guess I had a couple of questions. I don't know if this was pertaining to the one I wrote in before this thing. Can you pay your employees more than you would have? Is there any reason
Yeah.
why you do that?
You can't prepay them. There's no prepayments, but you can increase their pay. Yes.
Yeah, and I was just going to say, you have to take that into consideration with the FTEs also, because if you've laid other people off and you're thinking you're just going to increase the wages for the people who are still there, that's why they build in that FTE portion of it, where you have to consider how many employees you still have employed at that point too. It's got to be considering both of them. It can't just be one or the other.
Yeah, that's
So
an excellent point.
I didn't lay off anybody, so I don't have that problem. I guess because what my question is, like, I pay my employees monthly, and my disbursement date was April 20th, and so their first payment was on April 30th for wages that happened, or for time that happened before that, and then it will be the end of this month, 5/30. So, but the end of my 8 weeks is June 15th. So they would have incurred wages from here to June 15th. Can I pay them early, or?
I think that what you're going to find is no matter what you do, you're going to get 8 weeks. They've written it in. So you could start you have an alternative start date, which would be the start of the next pay period, which I guess would be May 1st in your case. So your 8 weeks would start on May 1st, which would give you until, June 30th. Right?
I mean, either way, you're going to get 2 monthly payrolls in there. And so one option that you have is the April wages that were paid based on what they paid them. And then now you're in May, where you could still do something about what you're paying your people at the end of this month.
Yeah, that's what I was wondering, if I could just pay them more now and just be done with it. Since this will technically fall in my normal monthly pay period.
I think if you mean like bonus them or something like that,
Yeah.
you could certainly pay bonuses inside of the period.
Okay.
I think you'll be okay on FTEs, it sounds like, because you didn't lay anyone off. If you're going to increase their pay for this period, I think that's okay. I think that's
Okay.
going to work. And go over that with whoever we're just getting started with you guys. So
Right.
we'll get on that right away and try to help you
Mhm.
gather the records. And
The cautious caveat that I've got in my mind, if I'm the SBA, is if you bumped up their pay to be 1.5 times for May to cover the first part of June, and then June was light, and I'm able to trace that, then that's a little bit of a risk point. So you certainly want to manage that.
Yeah, it can't be a prepayment. You can't like, all right, I'm going to pay you for the whole year in May. You can't do that. And it'll be clear if you did do that. But if you wanted to really increase their pay, and it'll be clear that you increase their pay, because their pay will go back to normal, but it'll keep going for the other periods. So yeah, an increase is okay. A prepayment is not.
Okay.
Yep. Did that help?
I think so.
Okay, great. Thanks.
Oh, thank you, Angel. Our next question comes from Lisa Generis, who I will bring in right now. Hello, Lisa, can you hear us?
Yes, I can. Thank you so much. I do want to start off that you guys are always up to date on any new law that's coming out. I know you don't need me to say that, but I do think that it deserves a thank you, because any information you give on this webinar has been found throughout, and you're very up to date. So we really appreciate you being part of the solution.
Thank you, Lisa. Next time coming to the webinar is Lisa Smith, and I think that'll carry even more weight. But,
Well, I
please do.
will preference what I said is I do not like to give Pat Generis too many compliments, because it makes my life difficult. So I'm very guarded in the ones I give. So that meant for everyone but Pat.
Excellent.
Appreciate that, Lisa.
You're
Thanks.
welcome.
So I just want to clarify a couple things. You've already said them all, but just because it's so complicated, I want to make sure that for our company that we understand them. Full-time employees, we have a lot of people working over 40 hours. We work a lot of overtime. And then we have other people that are interns, high schoolers that work 10 hours, 5 hours. In the example you provided, those part-time employees will be treated as a 0.5, whether they work 10 hours or 30 hours. Is that
That's
correct?
correct. That's
Okay.
correct.
Perfect. Then the second question is payroll, which I think you did answer this for Angel with community service. We got our loan on 4/17, and that is when our payroll went out, but that payroll was for hours worked the week before. So if we count the 8 weeks, that would be a week outside of the forgiveness window, or we could go past that into June. Are you saying that it will allow us to pick the 8 weeks within a little bit of a leeway window of what suffices best for our company?
Right. Well, yeah, you're going to get 8 weeks. That's the first thing I want to, there's no way to get more than 8 weeks. So you can't sneak in an extra payroll or anything like that. But it sounds like probably what would happen is your next pay period would start shortly after you got your loan. Is that
The
right?
day
Yeah,
after.
so there's like 2 days that will be missing, right? Like the 17th, we got our pay and that's when our payroll went out, but it was from the week before we had the loan, because hours are paid a week after you work them.
Right. And so you could elect to start your 8 weeks on the start of your first pay period after you got your money. So let's say you got the money on Saturday and your week starts on Monday. You could start your 8 weeks that following Monday. That's when your 8 weeks will start and you'll be okay. And if you incur it, so again, they're going to make sure you get your 8 weeks. If you incur the expense, let's say that your cutoff is June 17th, and your payroll is going to go out for that week ending June 17th on the 20th. You still get to count it, even though you paid it a few days later. You're going to get 8 weeks, and we're going to do the paperwork for you, so it'll be okay. Yeah.
Payroll
Right.
costs or incurred. And so we could look at what's going to be the better start date for you related to payroll, which is the actual covered period based on loan disbursement date, or the alternative payroll covered period, which Pat described, which is using the start date of the pay period that follows the loan disbursement date.
Yes, perfect. Thank you very much.
You got it.
Thanks.
Thank you for asking the question, Lisa. Our next question comes from an anonymous attendee who asks, are fuel costs for semi-trucks and or heavy equipment forgivable? What is the SBA's definition of transportation?
It's a good question. And that is a good question. And that I'm going to have to get, we'll post on the website. We'll get the information on that. I would think not, because it's more like a cost of sales in the case where you're running trucks. I would think not, but I need to research it because I don't know the answer. Kellen, do you have any thoughts on that?
I have not researched that, and I haven't seen one way or the other where they've issued guidance on it. We'd have to look into it.
Right. The guidance on that part of utilities. And I don't think so though, because I think that transportation and utilities, my interpretation of that is utility bills frequently have like a gas bill broken down in, all right, here's the cost for the fuel, here's the cost for the transportation, here's your total bill for your gas. That's my interpretation of what they mean by transportation, not transportation like vehicle expense. So I think I know the answer, but I'm not 100%. I think I'm 99% sure that the answer is no, but I will check just in case I misinterpreted it.
Yeah, I would say as a follow-up, reach out to us after this webinar. We don't have your email address with that there, and reach out to us and we can do some further digging and get the right answer for you.
Yeah.
Our next question comes from Brad Murphy, again, who it appears he is not in the webinar anymore, but he was asking a question about bonuses paid to employees that gets layered on top of their regular pay.
Yeah, it doesn't.
Are there
That's
any,
the question.
or limitations other than the 100,000 cap?
None that they've mentioned so far. It can't be a prepayment. It has to be just wages. It doesn't affect FTEs, but it is payroll paid. So it would count as payroll paid, incurred and paid. There's no strings. The employee doesn't owe you money. It was payroll. They've earned it. They got the money, and that's it. Yeah.
Excellent. Our next question comes from Thibod Lucas, who is in here. He cannot be brought in to talk for some reason, but I'll ask his question. If I pay myself once a month and the 8-week period is going to include only one payroll, should I add a special payroll payment to cover the 75% of the loan amount?
Okay, so it's 1 month. First of all, if you're the owner, it almost doesn't matter because it's based on 2019. If it's just owner payroll, if it's that you have a monthly payroll and the dates are weird and there's only going to be one payment in the 8-week period, if the month started and it ended and we paid it normally, just a few days outside of the month, but the expense was incurred the month prior, you're going to get that, so you are going to get your 8 weeks. You don't necessarily have to do a special payroll to make that happen. If you want to pay it a few days early because you're more comfortable having the 2 payroll journals or whatever to submit, you certainly could do that, but you are going to get incurred and paid in cycle. So if your cycle is a couple days after the end of your 8 weeks, they're going to recognize that. They did put that into the guidance. I hope that helps. And if you need to ask a follow-up question, type it in for Austin and I'll try and be more clear.
Absolutely. Our next question is a follow-up from Linda Recupito, kind of along the same vein, who asks, can you give your employees more hours of overtime as a bonus rather than a direct bonus?
Okay, so I think that's a 2-part question. So overtime doesn't affect FTEs. You can't be like a super employee that's 1.2 employees. So it doesn't affect hours. Overtime doesn't affect hours. But wages are wages. As long as they're not prepayments and the money was earned, you're okay. They could work OT. Yeah, for sure. It's payroll expenses incurred for sure.
Excellent. Linda, let me know if that answered your question. I'll ask any follow-up you have. Another question we have comes from Callie Stevens, who asks, if owners paid themselves in 2019 with a direct check, does that count as income, or is it only the amount that was written as a paycheck?
I assume that you're talking about a corporation. And if it's a corporation, it would have to be W-2 wages, unfortunately. So if it's a partnership or a sole proprietorship, it doesn't matter if you took the money at all. It's what you earned, what was on the bottom line, your self-employment income. But if you're talking about a corporation where they pay themselves, it's going to be based on their wages. Divide by 52, multiply times 8. Did that cover it?
I think she gave me a little sarcastic answer, but was that actually your question, Callie? Are you okay? Did we
She
answer
can
it?
come in and ask the question directly if she wants.
Yeah. Well, there's 3 Callies in the attendees, so I'll let her follow up with me. I'm going to move on to the next question.
Okay.
This next question comes from Scott Zivkovich, who asks, if a company is not able to have the same amount of FTE during the CP, the covered period, due to lack of business, how much of the PPP will be forgiven, if any? If so, how is that calculated?
I think that this is one of those things where they're kind of struggling with it right now. So hopefully we get new guidance that gives those kinds of people a break. But so it's, if you're at 60% of your FTEs, 40% of your forgiveness is going to go away. But it begs the question, so if you can't bring anyone back, you didn't have any payroll expenses anyway. And if you don't have any payroll expenses at all, you're going to have to pay it all back. That's the way it's written right now, you know, so it's based, you have to have payroll expense. That's got to be 75% of the forgiveness. So it depends on the situation. There is the safe harbor. So if you are able to hire everyone back for that June 30th period, at least the way it's written now, you could safe harbor and get past the FTE issue. But you still, if you couldn't bring back your employees, you didn't have payroll. And if you didn't have payroll, you can't have forgiveness. So the way it stands right now, you're in trouble. You know, if you can't bring your people back, you're going to have an issue, and you're going to end up having some repayment. And I'd have to calculate it depending on the situation.
And there were those unique circumstances that some companies, might have reduced their employees' hours, but they didn't, eliminate all of them. So maybe they go from 1 FTE to a 0.5 FTE kind of situation. And maybe they're not doing regular work, but they're doing other kind of, project work or whatever, kind of painting the facility or whatever it might be to keep them engaged and employed or something. So there's some creative ways employers could, engage or rehire some employees to some level to address this FTE conundrum.
Yeah, I think FTEs is much easier to fix than my 8 weeks are up and I didn't spend any money on payroll. That's going to be a real problem. You should be able to get your FTEs up, especially with the 0.5 computation. You'll hire a few people part-time and, you'll fix your FTE issue.
Yeah. Scott, let me know if that answered your question. I'll ask any follow-ups for you. We are getting down to the last 2 questions. So once we run out, we'll do a quick little outro. So get your questions in now if you want them answered. We have a follow-up question from Carrie Spiteri, who asks, if owners are not on the FTE count and can only get the amount based on 8 weeks and employees can get a bonus, does that mean that employers cannot get a bonus?
The owners cannot get a bonus.
The owners could not get a bonus. So they if you own it, they are not going to allow that. They're not going to let you manipulate it up. They're going to cement you to 2019.
And then finally, we do have a follow-up question from that asking if owners are part of the FTE. And
Nope, owners are not part of the FTE. They're kind of handled separately, not part of the FTE headcount.
They're taking you out of the picture so you can't, obviously that would be the easiest thing to manipulate. I'll just bump my hours, I'll bump my pay, and they've taken that out of the equation.
Our final question is garbage removal and dumpster costs covered under expenses?
If it's a part of your utility bill, so if I see garbage removal like the regular monthly pickup, I would think so. If you're a construction guy and you're renting dumpsters, I would say no. And definitely I would want to research that for clarity, but I would think that, in some places it's tacked onto the water bill. I think let's take a look at the garbage bill and let's get some clarity on it.
Yeah, I did just do a little bit of research on that, and they don't have clear guidance on it, but I think what you said sounds accurate. Basically, if it is a standard utility for you that you're typically paying, it would make sense to have that included in there. And just to circle back, I know someone had a question on the transportation cost too. That's something that they also haven't issued any further guidance on. So it's hopefully something that they will clear up later down the road, and they may do that for the utilities. But as of right now, they don't have anything definitive on it.
Thank you for your questions, everybody. Those are all the questions I have for you guys. I also received a couple general questions about if we'd be sending out a recording or the slide deck. And my answer to that is yes. Following this webinar, we'll be releasing a video recording of this on YouTube, and we'll be sending out an email with that link and also a PDF of the slide deck.
Yep.
But we had one more question about the utility follow-up. We can add garbage utility to the PPP.
It hasn't been cleared up yet, but I would say if it's a typical utility that you've been paying, I think it would make sense to include that. Yeah.
Excellent. And with that, those are all the questions that we have. So Dave, do you want to get into your outro?
Yeah, absolutely, you guys. So we just want to thank you, first of all, for carving out some time and paying attention and staying with us on this journey as we've been trying to stay on this. Lisa, your compliment was very well received. We really are trying to stay as in front of this so that you can be as in front of this as possible. And so, again, do visit the coronavirus updates page that we have on our website, where we continue to keep FAQs and then just posting as early as this morning about this forgiveness application and the FAQ from the Small Business Administration. So do check there. And then last thing we would just say to you regarding action steps, connect with your account manager regarding strategy about your PPP loan forgiveness optimization, and begin gathering those needed documents that we covered and that are discussed in the application. If you need help, of course, reach out to us. We're here to help you. And if you're not a current client, but you like the kind of service that you're seeing from us, we'd be happy to start a relationship with you. Just visit our website and hit that Get Started button, and that'll take it from there. So you guys, we appreciate this jam-packed hour and all the questions that you brought to us to help us stay on our game in serving you. And with that, yes, thank you. You're welcome. All right. I think that's going to do it for today, you guys. We wish you well. Continue staying safe. We're in your corner. Reach out. Thanks.
Thanks, everyone.
Yeah, everybody take care.